Now, this is a very cool screen that I've just taken from my Bloomberg charting platform, and it just shows you what people in the market, the financial institutions, banks, brokerages, firms out there, about 55 across the world, where they think Eurodollar will be over the next few quarters. So out of 55 financial institutions, banks, and brokerages, where do they think Eurodollar will be? And interestingly, you can see a big divergence. You can see just here that I've just shown you the difference of the most optimistic view in green and the most pessimistic view in red. You can see the most optimistic view is a move up to 151 at the end of 2011, quarter 4, and the most pessimistic view a move down to 120 at the same period. Everyone clear on that? So it's a big divergence of opinion amongst the biggest experts in the market around the world. And I look at this screen quite often just to see what the sentiment is like amongst the professionals out there in the market. Keep in mind 151 on the top side, 120 on the bottom side. Now, I want to show you what that looks like on a chart, because of course the chart is the most important thing, and that is what our profit and loss is associated with. And it's important that we look at these forecasts in the sense of how it looks on a chart. So this is a chart of Eurodollar daily chart going back to May 2010, and you can see the levels which I just cited. The move up to 150 or 151 is the most optimistic view that people in the market are looking for, and a move down to 120 is the most pessimistic that people are looking out for. Now, an interesting problem that I want to highlight here between these extreme views of people in the market. The move up, the most optimistic view, is just 3% from where we are now. It's a 3% reward from where we are now, or 592 pips. The move on the downside, the risk on the downside, is minus 16%, or in terms of those of you that like trading in terms of points, 2,408 points from where we are right now. And this is, for me, key, because a lot of us will look at these forecasts, but it's important to think in terms of risk and reward, maybe from a medium-term to long-term perspective, and just ask ourselves sometimes how far are we from these targets, be it a forecast based on economics or technical. So what I'm trying to say in a nutshell is that the risks are much larger to the downside, and the actual reward to stay in the trades that we're in at the moment, maybe over the next few weeks to months, is a lot less than it used to be. Now, what is pivotal from a technical perspective in my mind as to which way we go is this high that we had in April. I think it was April 11, April 12. It's the congestion area during the mid part of April, and that area is at 145.20. To me, this is very important. So for those of you who are trading the market or analyzing the markets, please write this level down. 145.20 on Eurodollar is pivotal to actually decide whether the bulls take us higher up to maybe the old highs near 150 psychological barrier, or a move below 145.20 may decide whether we continue in that larger correction, which was already down 1,000 points or so from the 150 area. That would then open up the risk, of course, for a breakdown of this massive uptrend that we've seen. Is everyone clear on that? So the forecast areas which I've just shown you shows a plus 3% bias, or 592 pips up, or a risk of 16% down, which is 2,408 pips risk. And the key pivotal level for me, and maybe perhaps for you guys, is 145.20, which is the April high area. That should be a key decider as to what happens from here. Now, one of the things I want to keep in mind, some of you might remember this from a previous presentation I gave on gold and silver. This is kind of an educational slide which I designed with a friend of mine a while ago, just to explain something about risk-reward ratios. This is more from medium-term to long-term ideas, but just keep in mind that this diagram shows what happens during an overvalued market. So I'm showing this in association with what we've just seen here on Eurodollar, a trend which may be overvalued at these current levels. Now, what this chart shows is the blue line shows market price rising from kind of a base accumulation phase into a fast moving momentum trend driven stage into what we kind of see as more accelerated, unsustainable, or maybe overvalued market stage. And that is usually the final stage of a market move. Now, during this entire time, we are making money or losing money, and that is what the red line is showing. The red line shows that you are making money steadily, and then suddenly you start to increase that profit accordingly as the market rises. And of course, during this time, the latter stage of this, you are making money in a very short space of time. But by doing that, you are also taking on a lot of risk. And so that is kind of what I'm trying to link here, the risk that you accumulate as you start to make more money. Now, this square area here, it just shows you the optimum area to be trading or investing in the market, and that is during this more conservative to more stronger performance in profit, but with a conservative risk premium priced in. Above this square area, you do need to start acting with tight stops. Market timing tends to be very important, and you should start be looking for potential exhaustion in this overvalued market. Now, is this clear to everyone, just from an educational perspective? Basically, what happens during an overvalued market in terms of risk and reward. So we might be making a lot of money at this point, but we are taking on a lot of risk. And that's basically what I'm trying to suggest for where we are at the moment.